pretty much in line on both fronts, but it's encouraging because we have had some surprises, especially if you think about the first half of this year. We have had a few scares along the way. So to see inflation trending in the right direction, to see GDP growth holding up robustly. Remember, we started the year thinking that GDP growth was going to be 0.3%-ish, and we've revised that up to 1%. So things are moving in the right direction. I think central bankers in general will be quite happy with the body of data we've got over this week for sure.
Does that aid the resilience then in the FTSE that we've also then seen across a lot of this year?
We have. The FTSE has also come from a starting point of where it was one of the laggards coming into this year. So now you're getting some supportive data alongside it as well. But all of this certainly helps.
Can I ask you about the opportunities in markets at this point? Because there are some areas of the market that have been selling off aggressively. Even though we keep looking at the Magnificent Seven, we're looking at some of the major indices, and it's not that bad in terms of how far we've drifted off some of the highs. I mean, the S&P 500 only 3.7% off its record high. So where are the good pickings in your view after this market rout?
So we had a bit of a growth scare and then a volatility scare, actually. And typically when you have these volatility events, you tend to have volatility echoes. And so at the epicenter of what happened last week, you have the yen carry trade unwind and some equity markets that are still, if you look at where the Topix is, it's still 6 or 7% off of where we started the month, and double digits off of its July highs. And I think there's some pockets of fear over there that those are opportunities. Remember, Japan was the most loved market early on this year, and suddenly you had a 20% drawdown out of nowhere, and people are hesitant to wade back in there. So these volatility scares and echoes do present tactical opportunities. So we're seeing it in sort of non-US equity markets, Japan, Asia, more generally Korea is another one of them. And then the LATAM complex, which has been very, very weak, both on the FX side, and part of the carry trade unwind has impacted that, but even on the equity side.
When it comes to Europe, how does Europe fare? Because there's been a little bit of appetite in the DAX. We had 7 positive sessions in a row. We mentioned the FTSE performance. FTSE's also been in play as well, but somewhat left out has been the French stock market. Yep. What do you see in the European landscape?
Yeah, generally reasonable valuations. If I were to categorize sentiment, it's people are just kind of blah about European, which tends to be a good thing, because when you have attractive valuations, data that even in the European complex is much more supportive now than when we had Lagarde coming out and saying this is one cut and then we're going to wait. If neutral rates are about 2%, we're still far away from neutral right now, so you do have some amount of policy accommodation that could come forth as well.
So when it comes to the French market,